Hey, Nick here from Income Digs. Today we're talking about a really important topic, 3 crucial mistakes for QuickBooks Online for real estate investors and how to avoid them. So if you're in the real estate game, if you're an investor or a bookkeeper for real estate investors, you're gonna wanna tune into this. This is essential to understand the things not to do within QuickBooks Online and how to get yourself set up on the right path. So if you're ready to join me on this journey, let's get into it. Quick, practical steps coming at you right now. So the 3 common mistakes that real estate investors make within QuickBooks Online. First, adding too many accounts too quickly. I'm going to show you what that looks like. This is super common. This is one area where we got to make sure we don't get too excited when we're starting our books for the first time. Second is we'll add rehab categories to our chart of accounts. Okay, again, really tempting to do this, and I'm going to show you why we really don't want to do that, and a really awesome underutilized fix to this. And the last one, and probably the biggest issue that I see within real estate investors with QuickBooks Online, is adding specific fixed asset accounts for individual properties. Okay, this really hinders our ability to scale and grow our business. I'm going to show you exactly what that looks like and my solution for it. So let's get into QuickBooks and let's dive into those 3 big mistakes. First one, adding too many accounts too quickly. So accounts, we're talking about our chart of accounts. If you're in your chart of accounts here, you're gonna have a limit on how many accounts you can have. I don't think you should ever get anywhere close to reaching that limit. Now I'm on a test account here and I have 103, and part of the reason is because I'm gonna show you some of the bad ways to do it. In your real set of books, in your real QuickBooks Online, I don't expect you to have more than like 50 accounts. You really shouldn't have that many accounts, right? And all the things we're gonna talk about today is I'm gonna show you why that is. So let's go to the bank transactions, and this is the common thing that we see. You get QuickBooks set up for the first time, you connect your bank accounts, and you have hundreds and sometimes thousands of transactions coming in. And we need to do something with these. Now, this is a big task. This is something that is very important that we kind of get right. Now, it doesn't mean that it's going to take forever and that we have to spend hours and hours looking at every single transaction and figuring it out. We can make some rules. We can employ the services of a bookkeeper or a virtual assistant to help us, but we need to make sure that we're understanding the guidelines for the accounts that we create. And what I see very, very commonly is that we'll get in here and we'll either trust what QuickBooks is suggesting, or we'll get kind of trigger happy when it comes to charts of accounts. Okay, so for example, we might look at something like this brewery right here. This is obviously like meals and entertainment of some sort, right? And so we could maybe go here and we can search and we can see that there isn't anything for meals and entertainment. So we go ahead and we add one, okay? Meals and entertainment, okay? And I can add that category. Now, am I thinking about where this belongs? Is this cost of goods sold? Is this expenses? Where does it go? I might get lucky and get it right. In this case, I'm going to say expenses, and I can put it right there, okay? And I've added an account, okay? And I can add it right there. I'm going to leave class blank. That's okay. So I might do that. And you do need to add some accounts, but then what you might do is you might see another transaction that should be like for the same kind of thing. So this is like another meal, right? And instead of putting it toward that account that you just created, you either don't know that you've created it already, or you think it's a little bit different. And so you make another one and you say, you know what, this one is meals and entertainment. Okay, so what I've done right now is I have 2 transactions that I'm slating to these 2 like meals accounts, and they're different, but they shouldn't be different, but I'm adding different accounts for each. And we keep doing this and it snowballs, and then it gives us this gigantic list of accounts. We're subdividing our expenses in too high level of specificity. We can't really do anything with it. The way we get around this is we think about our chart of accounts way before we come to the bank feed here. Okay, I want you to go to your chart of accounts, and I really want you to think about the accounts that you might use and only use the accounts you've created here and not on the bank feed. I don't want you to be creating accounts from the bank feed. You can, and it's convenient, but what happens is we'll create way too many. So I want you to come to your chart of accounts right here, watch the video I have specifically on your chart of accounts to really think about what those should be. I want you to really specifically think about your cost of goods sold and your expense accounts. Now, when it comes to cost of goods sold, I teach that anything directly related to your property should be listed as cost of goods sold. And as a starting point, you should use IRS Form 8825 as an initial template for the accounts to add. You can certainly add a few more than this. You don't need to add all of these, but let's start with this template and let's try to force ourselves to comply with this. Okay, now you can tweak it a little bit, that's fine. But notice how many we have here. We have only about like 12 accounts. That's about all you need for your rental properties. If you're doing rehab properties, maybe a few more. That's fine, okay? But you shouldn't have too many more than that. So force yourself to get into this list. Now that should be for your cost of goods sold. Beyond that, you're gonna have your general business expenses. Those general business expenses, again, I want you to really think about what do you do and what do you need to operate and what types of expenses should we be listing here and let's make sure we're not duplicating things too much, okay? What level of specificity gives me the business insights that I need to understand, am I spending too much, am I spending too little? What percentage of my revenue is going to this cost category? Okay, spend your time with your chart of accounts. Really dial this in before you go to your bank transactions. And I'm going to say that the best way to avoid adding too many transactions is to just never add transactions from the bank feed right here. We get too in the weeds here and we just start adding and adding and adding. It gets way too crazy. Okay, so that's the very first thing that I want you to do. Take your time with your chart of accounts. I have some videos out there. I have some templates out there. Take your time. Make sure you don't just add. Okay, now there's some other, actually the other two items we're going to talk about as far as mistakes also help to limit the amount of accounts we have. The next one we're going to talk about is when we're doing renovation projects, adding all of our renovation categories to our chart of accounts. That's also something we don't want to do. So what are our renovation categories? So for those of you who do any type of project, okay, so definitely people who flip houses, even if you're in rental properties, you're doing some construction of some sort, you're doing some capital improvements, you're probably going to be doing some budgeting like I'm showing here with some kind of level of budget categories, okay? Expense categories, rough electric, rough plumbing, HVAC, etc. You're doing some budgeting on that level. And we have the desire, and a valid one, to translate that over to QuickBooks. And I'd like to, check my actuals to that level of specificity as well. And the common mistake that I see is that, I'm going to switch over to a separate set of books here, is that we add those categories to our chart of accounts, okay? So within our chart of accounts, we're going to say, hey, look at all this stuff that I'm doing, all this renovating that I'm doing. I'm going to add all those different categories within my chart of accounts here. You can see I'm doing this on this test set of books here. Okay, and it kind of intuitively makes sense, I guess, right? Like we want to add those accounts so that we can track expenses to that level of detail. That's fine. But what happens is it really throws off our overall reporting, especially when it comes to business expenses that don't even fit into those categories. So what I'm going to show you right now is a profit and loss for a project that we kind of did it this wrong way, okay? Meaning we had that list of accounts. And so I pulled up a profit and loss for this company, and you can see that my profit and loss is huge. And this is only like 20 accounts, 20 categories. In my business, we use like over 100 categories, okay? And so if we had all of those as cost codes or as chart of accounts categories, our P&L is going to get way too difficult to read. Yes, I can click this little button and bring them all up, but honestly, it's going to be too crazy. We're going to not want to look at our reports because it's going to be a complete mess. So we should not allocate each of our cost categories or renovation categories to a specific account within our chart of accounts. There's got to be a better way to do it. And the better way to do it is one of the most underutilized features within QuickBooks Online. That is the products and services. The products and services can be equated kind of like to cost codes or items if you're using QuickBooks Desktop. What this enables us to do, take our list of construction categories and we can add them elsewhere within QuickBooks Online and pull on them within our expenses. So if I go over here and look at my products and services, it's right here, again, really underutilized. So if I go over to this list, you can see that I've added a bunch of these cost categories right here to my set of QuickBooks Online. And the magic part of this is that when we've added these, if I click the edit button, you can see that we indicate to QuickBooks that I do purchase this product and service, okay? So I have expenses related to it. And when I do, I want to tie it to my chart of accounts in a specific account here. So what this enables us to do is to drill down one level deeper into this list of what's called products and services or cost codes or construction categories. And we can use this level of detail, but it's going to map back to 1 or 2 or 3, whatever, a smaller number of accounts within our chart of accounts. And this enables us to get the best of both worlds. We have the level of specificity that enables us to compare to our budget, and we have a nice, neat P&L. I've added these products and services already. I want you to think through what those should be, okay? You can use some of the templates I have available, that's fine. But yours might be a little bit different. And the level of detail is different too. If you're building custom homes, you're probably gonna have a pretty big list where it includes lot clearing and excavation and rough-ins and generators and utilities. If you're just doing like renovations, then you're gonna have like mostly interior categories, okay? So depending on your business. Now I have a few templates available for you to check out. The other thing we need to do is turn on the products and services table on our account settings. Okay, so to do that, you're gonna go to the expenses section here, and then we want to indicate show items table on expense forms. That's currently on for me, so that's ready to go. Now, when I go to create an expense, I'm going to have this additional dialog here for item details where instead of adding, here, rough electric, we don't want to do that. I don't want my account to be rough electric. Instead, I want my product and service to be rough electric. That's going to give me the detail I need, but it's only going to go to one account. Let me show you what I mean. If I take that same kind of project that I was reporting on before, this big crazy one that had all these accounts, okay, too much, way too much, okay? If we then go into the 2022, this example, notice it's nice and tight and neat, right? I've got 2 accounts here. Now, does this mean that I've lost that level of detail on my rough electric and rough plumbing, all that stuff? No, doesn't at all. If I drill down into my cost of goods sold, okay, now here I can do group by product and service, run that, and I have all of those accounts that mapped to subcontractors or construction material have a level of detail within them. So if we look at how this all works, if I drill down into this expense, instead of me using category details up here, see that's blank? Instead I say windows and doors, okay? And now that enables me to have it all in here, okay? With a little bit more specificity. And I can then export this out. I can bring this into Buildertrend. There's so many different things we can do with this because we're capturing that level of detail. Products and services by far one of the most underutilized features within QuickBooks Online, and it helps alleviate this problem we have where builders, remodelers, flippers, even long-term investors want to add all these different cost categories to their chart of accounts. Don't do that. Use products and services instead. The last mistake we're going to talk about, and this is the biggest one that I think really hinders the ability to turn QuickBooks Online into a powerful force for your business, is adding separate fixed asset accounts for your individual properties. Now, this happens when we start buying property, and this is typically properties that are going to go on your balance sheet. So this is usually longer term holds or short-term rental properties. Whatever the case is, we're holding onto the property. We're putting the property on our balance sheet as opposed to our profit and loss. Okay, so not necessarily flips, but assets that we hold. And what we see happen, probably the most common thing that I get from students who come to me for help, is they're going to add an account for each property. And you can see I'm demonstrating that right here. So I have 3 properties here and I have sub-accounts within each of them. Now you absolutely should have sub-accounts for your fixed assets, meaning we should have a specific account for buildings, for capital improvements, for closing costs, and for land. The reason for that is because we're going to be depreciating or amortizing those accounts at different schedules. And so it's important for us to separate those out. That's a good thing, but if we separate them out by property, what this does is, one, it makes our balance sheet gigantic. I'm going to show you that in a second. It makes it really, really long and almost impossible to read and to understand and to interpret. The second thing is that it makes adding new properties really cumbersome. Every time we add a new property, we have to come in here and add, 5, 6, 7 different accounts for that property. And if we at some point decide to switch things up a little bit, meaning maybe I want to add another sub account for furniture, I got to go do that for every single property that I own. And it just becomes way too difficult, and there's just way too many accounts, and it gets us really close to that 250 or whatever your limit is. We shouldn't be coming close to that. All right, now I'm going to show you the solution to that in a second, but before I do, let me just show you what this looks like kind of on the negative side of things. If I go to a balance sheet as of 2029, here I have a balance sheet with, here you go, right? So here's my one property, here's my other property, here's my other property, and this is only like 3 properties. A lot of my students have 20 properties, right? And so we're going to have, 4 times 20, we're going to have like an 80 line list. It's just going to get way impossible. All right, and so this is what I actually call a one-dimensional chart of accounts. And this is, again, one of the most common issues we have. My solution to this is to employ what's called a 2-dimensional chart of accounts. And what that is that we create a generic list of accounts here, and we use some other attribute to have our balance sheet grow horizontally as opposed to all vertically. So we make use of that second dimension to see it grow. All right, now we can do that in one of 2 ways. We can either use class or customer. There's pros and cons to each of them. I'm going to demonstrate this with class as a starting point. If you have QuickBooks Online Plus or beyond, you can use class. If you don't, you can use customer. But I'm going to turn class on. In fact, it's probably already on here. So we're going to indicate that I want to use class. And what we're going to do is, instead of tagging our expense, and basically this is one big journal entry here, instead of tagging these transactions to this really specific account here, we're going to tag it to a generic account, and we're going to indicate class over here. I mean by generic accounts, let's go to my chart of accounts, and instead of having, all this here, we're gonna have a parent account for real estate, and then we're gonna have land, building, closing costs, CapEx, furniture, whatever. And notice here that I have these items. If I wanna add one or two, it doesn't really take much effort to do that. Now here I'm breaking down depreciation versus the original cost. You could do that if you want, or just tag everything to this level on the hierarchy and then have your depreciation as a separate line here. I'd probably prefer that. But establish your generic accounts first, okay? These are generic. Now we've turned on class tracking. We're gonna have a class for every property, all right? Now I created some transactions in the past to show you what that looks like. So if I go to my balance sheet for properties, it's gonna demonstrate just that. So what I'm showing now, notice my accounts here, real estate owned and very generic, land, building, closing costs, CapEx, and then across the top, because I've displayed columns by classes, I have my properties. If I drill down into these transactions, the way that I created it was I used a simple generic account here, and then I indicated the class over here. Now this here is business, that's location tracking, that's an advanced technique. We're not gonna talk about that in this video. That's if we have multiple entities in one subscription of QuickBooks Online. That's not what this video is about right now, so ignore that column for now. So we have class here, and generic account, class. That enables me to turn on this second dimension. Super valuable. And I can look across and see my different values. Now my total is gonna be my total. That's great. I can even do the same thing with my loans, all right? And that enables me to, in one column, see everything that's going on for that property, including the net income. I can drill down into this net income to see a profit and loss specifically for that property. Super valuable, okay? And this is really the key to growing and scaling with QuickBooks Online, is this two-dimensional accounts idea. It's not just for the balance sheet either, it's for your profit and loss. You should have a generic list of revenue, cost of goods sold, expenses, and then your classes going across those columns, okay? This is the catalyst to being able to turn the software into a powerful force for you and your business. All right, so those are the 3 common mistakes I see all the time. Without fail, students who come to me are dealing with these mistakes. And it really, you can tell, all centers around the chart of accounts and really thinking about the chart of accounts in a way that enables us to grow and scale. We don't want to pigeonhole ourselves into a situation where we have way too many accounts. We have rehab accounts. We have property-specific accounts. It gets way out of whack and it makes our reports unbearable. I hope you found this video useful. If you like what you saw here, definitely check out our end-to-end course, Real Estate Accounting Bootcamp. It goes through everything from the setup to buying property, refinancing property, improving that property, selling it, all the entire system that I teach within QuickBooks Online for real estate investors. It's all right there. If you're an investor yourself or a bookkeeper, definitely check it out. We also have a lot of free tools, analysis tools, templates, import templates, chart of accounts, products and services available at incomedigs.com. Check that out as well. I'd love to have you subscribe so that you get updates as we produce more videos, and I'll see you on our next video.